All right. Okay, I'm just going to skip through here. So good morning again. And so I was speaking with Lisa, and she brought some of the key questions that have been coming about. And that's part of what I've created in this presentation to specifically answer those questions. So the learning objectives today would be, what you need to know before you start your entrepreneurial journey. What are the differences between an LLP, LLC, S-Corp, and C-Corp? Should we have a separate credit card and bank accounts for the business? Creating a business plan, budgeting, record keeping, managing for profitability and a cash flow, and any necessary insurances and financing. So I'm going to try to go through them in a very high-level summary version, and during the Q&A, I'll try to answer additional questions that you may have. So starting out, what to know before you start. One of the things from my experience is that, you really have to accept the fact that it will be very challenging. There's this big saying, everybody goes around saying, oh, 4 days a week, you can do whatever you want. To be honest, until you hit really big, and you're delegating, you're able to hire employees and delegate, that you're doing a lot of the different pieces. You're the business owner, you're the visionary, you're the marketer, you're the salesperson, you're the accountant. So if you're doing everything as a beginning entrepreneur, that 4 days a week thing doesn't exist. That's just people say that they've already achieved their goals. So just to give you a heads up, it is going to be challenging. It's going to be time consuming, but if you have a vision, you want to go after it, it will be definitely worth it down the road. Don't do it alone. This is something that I've learned from my mentor as well, that, the 5 people in your network that are the top people that are going to support you. So make sure you're supporting yourself with, super high level, energetic, motivating people that will really support you and lift you up when you are kind of doubting yourself halfway through the process. A third thing is, do get a mentor. If there's an area that you're not familiar with, I highly recommend having a mentor. I had to do that for myself. I've hired people for, helping me with marketing and business development. That was an area that I was not trained in. I was always the one holding the fort, doing all the accounting and the budgeting and all that stuff, but no one really taught me how to be out there and really present what I actually do. So definitely get a mentor that's in an area that you are not so familiar. The other key thing I wanted to bring out is not to rush through the process. Set steps and follow through, especially as it relates to licensing and tax. So a lot of times, a great idea, you may have a great idea and you're like, okay, I got to do this. I think it's important to put together your plan and the process. What are the steps and the timelines of when you're going to achieve it? I'm going to cover this a little bit more in the business plan, but this is just a very high level. Another thing that I've learned from my experiences, don't waste hours trying to DIY everything. In business, DIY means more failures than you think. So if there's something you're unsure of, by the time you spend the time to research and figure it out on your own, and then try to do it on your own, and then you probably will fail multiple times. It happened to me. Now I've learned my lesson, and I would not DIY everything. I'll try to find the right people that I feel most comfortable and trustworthy with and let them do it. And it will be done properly the first time. And the last one, don't self-sabotage. If you don't see progress yet, don't give up. This is something I think every entrepreneur goes through, but nobody really says it because everybody only shares their, their achievements versus just saying how hard it was to get to where they got to. Self-sabotage happens as soon as you kind of like, you're in energy mode, you go through so many different things, and then you don't really see the progress yet happening. And you kind of go into a mode of like reconfirming, is this the right thing to do? Why am I doing this? It's kind of a self-sabotage. You kind of like stop yourself. And that's what brings me those 5 people. If you have those 5 people around you, they will bring you out of that self-sabotage situation sooner rather than later. So our next section is, what is the difference between an LLP, an LLC, an S-Corp, and a C-Corp? So this was a nice little table that I found on Rubicon Law. So because writing up, it just takes too much, and I'm a very visual person. I like spreadsheets, if you can tell, this is a great way to put it together. So an LLP is basically a limited liability partnership versus a limited liability company. So LLP, LLC, it's about the same. It's just that the taxes will be different. From a liability standpoint, you know, all of them actually have limited liability. Your personal belongings were not going to be in jeopardy by any means. They all have reporting fees and administration requirements. The LLC actually is more flexible in management because, for example, if you are a single, you know, owner LLC, you know, it's almost like being a sole proprietor. You're just being, you know, more protected from a legal standpoint. So the management is fairly easy. There's not too many heavy requirements. An LLC also can have limitless shareholders. You can have as many shareholders as you like. An S-Corp is different. It's limited. Let's see. Between the S-Corp and the C-Corp, and I'm going down the line here if you're following along. The difference here is the S-Corp is going to be taxed as a pass-through entity versus the C-Corp. The C-Corp gets double taxation because it gets taxed at the company level, and then when the shareholders get their dividends, it's going to get taxed to the shareholders. So the good part that most people like to do the S-Corp is, from a tax standpoint, you're being treated like, you know, it's a pass-through. You're not getting taxed twice. An LLC cannot go public, but then of course, if you're a C-Corp or an S-Corp, you can. There's other eligibility requirements here. For example, you know, if a trust is a part of it, or if you want to have, let's say, non-US citizens to be part of it. So there's a lot of limitations on the S-Corp. And then for venture capital, LLC and S-Corps are not as attractive. Meanwhile, C-Corp would be attractive. So as you're thinking through your business idea, this is a good way to kind of think through where would be the right fit. If you're envisioning your business to be mainly you, the owner, and you just want to protect yourself from liability, you can go with an LLC. Everything is a lot easier to handle and manage. Down the road, as you grow, you can actually choose to be taxed as an S-Corp, but you remain an LLC. So that's something that we can talk through more deeply, you know, if that's the situation that you're considering. But just for the sake of time, I just want to keep through from a very summarized, high-level perspective, just to answer as many of the questions that you've had. So here, continuing a little bit more from a tax reporting. For S corporation, shareholders report income on Form 1120S. Any salaries that you may have had from the S corporation, that's going to be on your W-2, and then the profit and loss will be recorded on the Schedule 1. So for example, if you are an S Corp, you pay yourself a salary for running your business, your company is going to file Form 1120. You will get a W-2 from your company and a K-1, because that's how you're going to report your pass-through earnings. For an LLC, members report income on their personal income tax form 1040 Schedule C. If you are a partner, let's say if you have two people and a partner as an LLC, then you would use the form 1065. You would still need a Schedule K-1 for the LLP. LLCs may also opt to be taxed as a C or an S Corp. This is just a form that you would fill out, and then you can change the way you're getting taxed, and something that I mentioned earlier. And then if an LLC opts to be taxed as a C Corp, tax reporting is done on the form 1120 or 1120S, which brings us to this one here. And this salaries on form W-2 and profit distribution on 1099 dividends form. Okay, so the next question that came up was, should you have a separate credit card and bank account for your business? The short answer is yes. And once you have your business registered with the state and you have your EIN number from the IRS, it is very important to open your business operating account, at least just the checking account. And that's important because it will show the IRS that you really mean business. This is not a hobby. And it also keeps clean records, and it will make things a lot easier for tax filings. Okay, creating a business plan. Why is it needed? So I wanted to cover this because, for example, for what I started initially as a consultant, I didn't really need a business plan. I was just providing consulting services. And I wasn't thinking as a business, a future, I was thinking more consulting. So if you're just starting out and you're like, I'm just going to test this out as a consultant, do you really need a business plan? Not necessarily. You don't have to spend, $5,000, $10,000 putting together a business plan. But if you are looking to have a business that you have to bring investors, or you want to get from some funding, some financing, they are going to require some type of a business plan, even if it's a summarized version with some financial data. So what would be covered in there? Usually there will be a pitch deck. This will be a very, very short one-pager that kind of gives the key points of what you want to do. This is a way to initially attract an investor, give them just enough information that would catch their attention. The next section would be an executive summary. So this is a little bit more expanded from the pitch deck. So it gives a little bit more information, something that you can cover during a meeting with your investor or your loan officer. And a detailed plan, that's really for you, but they may ask for it. This would be a really detailed information as to how you're going to do things. What are the areas that you're going to cover? And that brings us to, what are we covering? Problems and your solutions. So what is the problem that you're seeing in the marketplace that needs a solution? And then what is your solution? What is the target market, and who are your competitors? What is your company advantage? Basically, why should anyone buy from you? What is it that you're doing differently that is going to be so interesting? A full marketing plan. How are you going to reach out to your customers? Any other key metrics? These can be financial or non-financial, but it could be metrics that are important to the type of business that you're choosing to work. Of course, they would want to know the ownership structure. Is it a single owner? Is it going to be partners? They want to know who's managing the business and any advisors that you have on board that are helping you. And lastly, of course, the financial projections with all of the statements. Most of the time, the 3 years is enough, but sometimes you might want to do 5 years depending on what you're trying to get at. For example, if your business will probably not make a return until the 4th year, you might want to do a 5-year projection to see, okay, on the 4th year, I'm going to start making money. For example, I was working on a business plan and projections for a gentleman that's a research scientist. So for a researcher to make money, it was going to take him almost, 6 years to really break even. So that's where, you make the choice of whether the 3 years is going to be enough, or you might want to come up with a little bit more high level extended projections a few years more out. Okay, so the next question that came up was about budgeting. And what is the difference? I wanted to kind of clarify between the budget and projections, right? The projections are more than 1 year. It's, as I mentioned, it's 3 years minimum, 5 years, and you can do up to 7 years, but most of them are like 3 to 5 years. A budget is more short-term, more like an annual. It's 12 months. It does help it helps you keep track of all your expected income and expenses. Most of the time it's used by businesses that have already been established, you know, a year or 2 year old. And you can, you know, for the first year, you can use your, you know, first year projections as your initial budget to kind of keep track of things. If you're someone that is unsure of how to track everything, this could be a good way to say, okay, how much am I spending? Am I sticking to my budget and all that? The only downside of budgeting is that if you're going to look at the budget in a way it's like set in stone, it's going to be tough to make proper decisions, because sometimes there will be an opportunity that comes your way and you might have to spend the money to get that opportunity going. And in, let's say, 6 months down the road, that opportunity can turn into 10 times what you spend. So if you're just going to stick to a budget, keep an open mind, because sometimes an opportunity comes and you might have to spend more money than you budgeted. Okay, managing for profitability. So I kind of wanted to give a very high level margins that you should consider. So a 10% net profit margin is considered average. 20% margin is considered pretty high or very good, and a 5% margin is fairly low. So if you're doing some kind of a plan, a budget, or your projections, this should be a good guidance as to you know, where your profitability should lie. Managing for cash flow. So cash management is really, really key. And the circle here, it's all the different pieces, right? So you have your collections, right? You send your invoice, and the faster you get paid, the better your cash flow is going to be. Payments. A lot of times we have everything on credit cards. So, you know, the credit card, you know, it's just you're charging it and you pay it 30 days out. So that helps you out, you know, delay the timing of when you're going to pay. That's a part of cash management. Real-time controlling, liquidity management, forecasting. This is all part of like making sure that you have enough income to cover all your expenses and have some that's left over. So all of this will play a role together. It's not something I can cover that quickly because it's really more detailed. But just think through that. You want to send an invoice, you want to collect as fast as possible, delay payments as much as possible, just to make sure that you have some type of a system in place where you're not just spending money without realizing where it's going. So that's kind of short version. Okay, another area that came up was business insurance needed. I am not, you know, a registered insurance agent, so I cannot tell you what you should do. But what I can tell you from my experience of running a business, my business, and my past, you know, employer, these are some of the insurances that would be required, and it depends on your type of business. So the best thing to do is talk to an insurance agent and help them, you know, let them help you go through the process and see which ones are the right ones for you. For example, there's a property damage, bodily injury, personal and advertising injury, workers' compensation, general liability. There's business income insurance, data breach. And again, I'm just going through very high level because I'm not an insurance agent, but just so you know. And by the way, this PowerPoint will be provided to you, so you can always go back and look at the information I've put in, and you can talk to someone there. Commercial auto. So this was, for example, we needed that at my old employer because our employees used to drive their vehicles on behalf of the business. Sometimes we used to have events, so we used to have them drive around some of the stuff they need. So this is an insurance that you may be required to have if your employees are driving on your behalf, or if you have a vehicle that you use as part of your business and it's owned by your business. Commercial flood insurance, again, depending where your property is. Other commercial property. Professional liability insurance, I would think this is one of the most important ones, especially if you're a service-based industry. Like for me, that was the first thing I went and got, you know, as soon as I started as a consultant. I'm like, I need to protect myself. So if you are considering a service-based industry, I highly recommend you look at this first thing. Okay, so here I also have two tables of financing. I'm not going to go into the details because that's more of a finance, a banker type of loan officer type of conversation that might need, a more, specific person to come explain to you. But there's different ways of getting loans or merchant cash advance. You can get business credit cards. This is the easiest one to go out and get. And you kind of build your business credit as well. So depending on your need and the type of business you're trying to build, it could be a combination of things. So these are two tables that I've put together for you that you can review at your own pace, so that we can stay within the time frame. And I think I'm doing good on time, Stacy.
You are.
Yay.
I do have a couple of questions.
Awesome.